Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. We are 2.5 hours into trading. It is Tuesday, February 16th. Let's take a look at the last handful of picks that we've had, and then let's look at the market. I want to find you some new trades, so let's get started. Last week, we had A, B, and B that was highlighted. I still like that stock. And you can see here, we had a bullish flag formation. Stock has continued to push higher. Very nice pick for us. TSM was another stock that I highlighted for you. You can see bullish flag formation highlighted in here. Really has run higher, about $8 higher. Nice pick there. JMIA really hasn't done much of anything. It's still compressing here near the all-time high. What I would do there is click GTC, drop your alert line right on the top of that candle. I've got a horizontal alert line. If the stock breaks through it, I think it'll be a good play. It's got earnings coming up next week. You can see by hovering over the E. Another one, AMAT, we highlighted last Thursday. That was beautiful. Bullish flag, zoom, gone. Beautiful. Really good money maker there. On Friday, I highlighted a smaller stock. It is kind of dogging around right now. CRNT was a symbol. Should be long stock, not long options on this. It's only a $5 stock. You can see the downward sloping bullish flag here. You can see how the stock broke out through it. It moves around. You can see that by the gaps and the long tails in here. So stick with it. As long as it holds that upward sloping trend line right here, I'll draw it in for you. I'm okay hanging on to it. It should come into play right around the $5 level. Let's take a look at the market. Not so good. You can see there's your opening gap higher, and we are in a steady downward trend. If you look at my pre-open market comments, this is my blog. S&P 500 within striking distance of 4,000. Be patient on the open. In my pre-open market comments, I explain exactly what's going to happen. Gaps up to new highs, worst possible day trading environment. Look for a pullback. Be patient. This is exactly what happened last week. I warned you last week that these moves are no good. Let's go back and take a look. You can see how persistent the selling pressure is. So here you had 1, 2, 3, 4 touches. You could see that there were buyers lined up here. We had just closed the gap, and then wham, as soon as they took those sell stops out, the market was continuing to head lower. Now, I'm not overly concerned about this because you can see last week on Friday, the market really spent a lot of time. That was the close from Thursday, and that's pretty much where we were with 2 hours left to go in the trading week. And then all of a sudden, whoosh, we get this big rally. In the last hour of trading until the gap opened this morning, that was about a 35-point S&P 500 move. Of course that's going to be tested. Anytime the market gets ahead of itself, whap, we're going to see profit taking. This is not off to the races. There's a lot of headwind here. We've got some selling pressure. So do not chase. Let stocks come in. On those dips, you'll have an opportunity to enter, and then you'll be able to ride that trade higher throughout the course of the day. The next morning, if we get another gap higher, it's a good time to take profits on the position. If we take a look at the daily chart, I am still bullish on a longer term swing basis. I'm going to draw this upward sloping channel in so that you can see it. Market first, market first, market first. These channels, when they are orderly like this, can last for a very long time. But every time we poke through the upper end, you can expect a little bit of a pullback. We did have compression last week, and the bid was tested multiple times successfully. So I still believe that buyers are in control. But the market's going to have to digest these gains off of the February low for a little while before it can stage that final leg higher. I believe that SPY 400 is still in range. 405 could even be in range. The impeachment trial is over. President Trump's been acquitted. That means the Democrats can spend time on the stimulus bill. $1.9 trillion is a lot of money. We know that the Fed is going to maintain easy money policies through 2022, and they're even willing to let inflation go above their target. Janet Yellen, our Treasury Secretary, is talking about going big, issuing 50-year bonds. There's going to be a lot of money sloshing around. It's going to find its way into the market. And we know that on any market drop, they're very brief, very shallow, because there's a lot of money that wants to go into the market. So let's take a look for some bullish trades. I've got a few that are setting up well, and we're going to go right into my heavy buying list. We'll take a look at some of the stocks here. Dash is very interesting to me. I like this. You can see there's a downward sloping trend line right there. That's a bullish flag formation. You can see how the stock rallied up to its high of the day. I'm going to ignore this right here. And actually, I'm going to turn off all of my pop-up alerts. This is a nice stock. You can see you've got a bullish flag formation here. Stock's been able to move up through it. Good relative strength today. Market's been down, down, down. Stock's been up, up, up. Do the SPY overlay. The gray line is the SPY. Look at that sell-off in the SPY, and look at what the stock has done. Grind, grind, grind. This is our edge. I can't show you any better than this chart right here. So if you felt that this was a nice little dip in the S&P 500 and that we were going to be able to find support right there, and you bought this stock, the market continued to go down. You were wrong on the market. If you traded S&P 500 futures and you bought the futures here, you lost money, and you lost a lot of it. If you bought this stock, you made money because it continued to go higher. Now, I don't advocate when the market's selling off like this to hang on to the position forever, but you could take profits on it. That's the cushion. That's the edge that we trade. Now, typically, we know what the heck the market's going to be doing so we can position ourselves properly. If I go into the 5-minute chart, as I mentioned to you, this is a nice, swift downtrend. The momentum is established. I believe that we're going to sell off. We should be able to find support somewhere around that 391 level. I will be looking for a long red candle that turns into a bullish hammer, so it'll close near its high, perhaps even have a green bar to it, or a long red candle closing on its low, followed by one or two long green candles closing on their high that engulf that last long red candle. If I see that and I have my bullish 10P cross, which we're troughing right in here, we're getting ready to cross, that would be an excellent entry point. Something like this, but you want to see it finish like that. Where it trades during the middle of the bar on a 5-minute basis does not matter. A lot of these bars look like they're going to do something and they change in the last minute, so they have to complete. This could be the bar that we're looking at for the low, especially if it's followed up by another nice long green candle closing on its high and getting above the high from Friday. 10P indicator, look at that bearish cross right there. Let's put that right there so you can see where it came into play. Right there, it's telling you, be careful. That was pretty much the high of the day. Didn't tell you to get short here. Didn't tell you to get short here. Didn't tell you to get short here. It told you to get short right here. That's just luck. Really. Let's take a look at this bullish cross right here. Right here. That was a beauty. There's a bearish cross right there. We compress. Got a little bit of a sell-off here with the market compressing, even heading a little bit higher. That's a bullish divergence. That bullish cross right there was gold. Anyway, we use the 10P indicator to help us time our stock trades. Let's get back to DAVA, excuse me, DASH, and you can see that this stock actually looks pretty decent. I'm going to go through and look at a couple of others. Caterpillar. I think Caterpillar sets up pretty well. It should get some play off of a infrastructure build out. If that stimulus bill gets passed, you can see nice horizontal breakout right here. WYNN. I do like this. You've got your downward sloping trend line right here that was breached to the upside. The stock tries to challenge the all-time high. It compresses. It has to consolidate these gains. And then today, we've got it poking through. Market down, down, down. WYNN, nice breakout and good rally. Still holding that low from the open. Yes, it's been up, but mind you, look what the market's done all day so far. Steady down. Not this stock. It's giving back a little bit right now because of this final push lower. I like WYNN. I think WYNN sets up very, very well. WYNN might be the stock that I highlight today. In fact, I think it is going to be the stock I highlight because it's already posted earnings right there. It had a good reaction. China is on track faster than the US. WYNN has a lot of casinos in Macau that generate the majority of their revenues. I think that China's back on track much faster than everyone else. I think the casinos in Macau are going to be back on track before our casinos are. Even domestic casinos are seeing some pretty nice play today. So WYNN, that is your trade of the day. How would you approach it? You could look to sell a bullish put spread down here around the 114 level. And there you'd probably do, you could even do a 115, 112.50 if those strikes are open. Further you go out of the money, the less credit you'll get, but the higher your probability of success. You could also do a 112.50, 110 bullish put spread for a 50-cent credit. Those of you who are more aggressive and who want to buy calls, this is a nice breakout. You would go in the money longer term, perhaps buying a March or April 115 call. They're going to be expensive, but you're going to have a very high delta with those. As the stock continues to move higher, those options will move point for point. Thanks so much for watching. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.